So with that, I'm going to first start by introducing ourselves. My name is Jerry Frank, and I'm the co-founder and CEO of Stratafolio. And with me today are two people you have probably already had the opportunity to work with over the years. We have Jennifer Clark and Emily Lidikin. Jennifer and Emily are both accountants by trade, and they know and understand commercial leases very, very well. Jennifer is our director of implementation, and she leads our full service onboarding team. She's also a QuickBooks certified pro advisor and a QuickBooks certified user. And Emily is our senior onboarding specialist, and she's a QuickBooks Online Pro advisor as well. So thank you, Jennifer and Emily, for being here and offering to share your expertise on CAM and leases and all kinds of great things around this topic. All right, so today we're going to cover the following things. We're going to provide an overview of triple net leases or related types of leases. We're going to go through calculations of pro rata share for tenants. We're going to go through some of the common mistakes that we've seen with CAM reconciliations in the past. We'll go through CAM reports and how you put those together. We're going to share our best practice chart of accounts, and you are all welcome to use this if we haven't already shared it. And then we're going to talk through the process for cloning CAM, common area maintenance reconciliation expenses, for the next year. And then we will discuss base years and caps if that is something that you need to address. And then finally, we're going to talk about using classes. And at the end, we will address questions and answers and answer those questions that you have. We will monitor the Q&A or the chat session for any of the questions that you have. If it's relevant at that moment, we may address it right then and there, but primarily we will hold questions till the very end so we can make sure we get through all of this content.
So, as you see here, each of the ends in a triple net lease stand for a specific expense that the tenant will pay their portion of. All of the tenants obviously pay their base rent. Depending on the lease, there may be only one expense, two expenses, or all three of them. So the first end represents the real estate taxes. This is very common for tenants to pay, even if they have just a ground lease. The next is insurance. For example, general liability insurance that the landlord pays for the building. It is stated in the lease that this is a cost that they share and is typically an expense that will be pro rata shared for the tenant. Then the last is common area maintenance, CAM, or operating expense. You can use all of those words interchangeably. This is where it's more important to know what the tenant will and will not pay for as part of their lease. This is normally a negotiating factor that a lot of tenants and landlords have. And so most large corporations have specific items that they will and will not pay for. And so those should all be clearly stated in the leases. So how to calculate out your pro rata share of the leases? Each of the tenants pay their pro rata share of the building or the property. This is a portion of the building that they are specifically renting. So this example is a strip mall building. And so in here, you see that this is a little graphic to show you that is the calculation is done by the tenant's rentable square footage of the unit divided by the rentable square footage of the building. So this is easy to do when you have one tenant, but when you have multiple tenants inside of a building, it's harder to get your pro rata share. In Stratafolio, we calculate these out for you, so there's no need to reinvent the wheel. So we are going to go over some of the common mistakes that we have with CAM reconciliations. As we've been doing this for a while, we have seen a lot of good systems that are already set in place, but as most of you know, the majority need work and need help, and that's the reason why people find us. So these are the typical mistakes that we find. Not posting transactions to the proper accounts, meaning that you don't have the separation between reimbursable and non-reimbursable accounts. So not all expenses for a building are allowable. For instance, roofs typically are not covered by a lot of the big corporations. not doing CAM at all, this leaves money on the table for the owners, and it is, you know, something that is such a daunting task sometimes that people don't do, and so you're going to be leaving money out there. Not charging CAM when you have rent abatement. Just because there's a rent abatement, again, this is a negotiating thing with the tenants, but just because there's a rent abatement does not always mean that OPEX is rent abated as well. So you need to make sure that you are clear if it is abated or not. A commercial lease allows the expense. We see this a lot too, where there's expenses that are not being pushed through to the tenant that should be. But there's also the opposite of the charging for expenses not stated in the lease. This is some can be a huge costly mistake that involves lawyers and all of that kind of thing. Again, roof repairs is one of those big ones that's not typically covered in that by the tenant. Using inconsistent leases tends to be an issue because the more consistent, the more you know what's going to be charged. The tenant knows what's going to be charged, and it saves a lot of time and money. And then incorrect pro rata calculations. Lawyers tend to round on leases and don't use the exact amounts. And this causes a lot of headache in the end, especially if it's more than 100% or less than 100%. If you're using calculations that don't equal 100% of the pro rata share, again, you're leaving money on the table. And then the other big point is doing CAM late in the year. No one wants to have to remember what they charge or what this bill was for 8 months ago, a year ago. It's hard enough doing last year, but if you are 6 months behind to even starting CAM, it is much more challenging for you, your bookkeepers, your CPAs, everything to find that information. So,
all right. So utilizing STRATAFOLIO into your workflow. First, when we run CAM reconciliations, we want to make sure that the books have been reconciled. STRATAFOLIO is only going to be up to date and as accurate as what your QuickBooks is. CAM reconciliations will be the same thing every time you run them out of STRATAFOLIO, as long as those reimbursable since it does only take one click to do the CAM reconciliation, run it in your third quarter. You can forecast what your end of the year will look like. Sometimes realizing that your tenant, that you're going to owe your tenant a large amount is good. You can do a landscaping project or repave the parking lot. You can also project to see if a modification of next year's CAM that you are charging your tenant needs to be made. QuickBooks Online is going to sync with STRATAFOLIO within a few minutes or when a transaction is entered or modified in QuickBooks. QuickBooks Desktop does require the manual sync via web connector to be up to date with STRATAFOLIO. So please make sure that you run a sync on your web connector before you start running the CAM reconciliations themselves. All right, these are the parts of the operational expense tab that we are going to cover within our STRATAFOLIO demo with Jennifer here in a little bit. There are two parts to that operating expenses tab, actuals and invoices. Your invoice part of the tab is for amounts and income items being added onto an invoice. Actuals is where we start pulling in those expenses to delta between income and expenses to reconcile those operating accounts. Pro rata share is an automatic calculation in STRATAFOLIO that Jennifer spoke of earlier based on unit square footages versus building square footages. If you have multiple units in a building, please be careful modifying the unit square footages because it can change pro ratas across the entire building. We typically base CAM off of a calendar year. Sometimes this is specifically stated in the lease, but that calendar year is typically how taxes are calculated. as well as closing books at the end of the year. We also send lots of reminders. You might have gotten a few about CAM cloning at the end of the year, so no one forgets. Time periods in the invoice section, those are what pull into the drop down of the actual section use. The drop down in the actual section. The reconcile button is on the actual section. This will pop out an Excel spreadsheet with a CAM reconciliation report on page 1 and a breakdown on page 2. That Excel sheet is modifiable as needed after it comes out of STRATAFOLIO. Hide columns if they do not apply, change names, etc. Tab 1 and 2 do not talk to each other. So if you are going to make changes, please take that into consideration. And also please remember to save a copy if you edit it. You will need to verify the invoiced amount on CAM reconciliations. We only pull in what is the amount that was invoiced, not so much the amount that was collected.
Yep, and running a simple AR report out of QuickBooks will verify that you have collected the amount that you should have been collecting for the year. So we are going to get into next the demo account, and I'm going to show you what. Let me open it up. I want to get this open for this is your main organization page, which hopefully you all are very familiar with. Again, we have the leases tab that you can select, and then I'm going to go straight into our Quickie Mart tenant. So in the Quickie Mart tenant, we can look at the OpEx tab. This is where, again, we have all of that information for the OpEx. So in here, we have what Emily was just talking about, the invoice amount or the actuals. So let me open up the invoice amount. So this is for 2023. So in here for this tenant, we have real estate, insurance, CAM, repairs and maintenance, and snow removal. And so right now on the invoice would be 2625 being invoiced. When I scroll this over, you can see which income account those are getting posted to. So those are getting posted to the CAM income expense recovery income item. So this is, again, the invoice section. So when I click onto the actuals, this is going to get us into the actual amount that we have coming from your QuickBooks. So again, the time period selected. So this automatically sets you up for the most current time period that we have entered into the invoice section, which is 2023. You can also change it back a year. And so once you clone over to 24, 24 will be your default. So you'll clone it back to or select 23 to get that information. Down here, you can expand all of these categories, all of this to make extra subcategories. And in your subcategories, you can see how much was posted for each of these tenant, or for this tenant for each month for each of these subcategories. This tenant's pro rata share is 50% because they rent 50% of this building. So therefore their pro rata share is 50%. So in order to get those CAM reconciliations that we've been talking about is you simply press the reconcile button. I'm going to pull that over because it always, at my computer, I have a Mac, it always comes out a little bit different for me in a minute. So this is what that CAM reconciliation report is going to look like from 2022. So this tenant, Quickie Mart, is 3,500 square feet out of a 7,000 square foot building, so in which case is 50%. Down here, you can see that these are the actual expenses for this building, and then they're 50%, so this is the tenant's portion that they would be responsible for. Because we only put it on the invoice for CAM, we don't break it down anymore. We just have that we have invoiced them $31,500, in which case the difference between the invoice amount and the grand total for all of the operating expenses at that 50% is actually is $19.77. We were pretty spot on. Just like taxes, goal is always to be zero. So page 2, this is what page 2 looks like. We don't have a lot of transactions for this account, but you will see each of those months. So that way, if you are looking for a specific expense, doesn't seem right, it seems too high or too low, you can look at those expenses and figure out which month do you want to look into your QuickBooks to figure out. So in which case, I'm going to look in repairs and maintenance in June and find out what was expense in that month to figure out why this is more than what I thought it would be. So those are the basics for the CAM reconciliations. Let me switch back to this one more time. And so there you go. So after looking at thousands of commercial real estate chart of accounts, we have created a sample chart of accounts for commercial real estate that we share with all of our clients, as Jerry was mentioning. Of course, this gets custom fit for you. If you don't have snow removal in Florida, you probably don't need it. You can take it off. But our sample chart of account also uses the standard 5-digit numbering system for accountants. But the main thing about this that we want to really stress is that it clearly labels the reimbursable accounts from the operating expenses that are reimbursable and non-reimbursable, very clearly stated. This makes it clear for the owner, the bookkeeper, anyone who needs to look at it for any reason, what is reimbursable expenses are and what are non-reimbursable. The whole goal is to make it as clear as possible to you using it, as well as anyone who might need to use it in the future. As you all already have charts of accounts already set up, but we want to mention this to you because at any time that you make additions or changes to your chart of accounts, or your general ledger accounts, whatever you want to call them, you need to make sure that they are mapped accordingly in Stratafolio. During the onboarding process, Emily and I and our team take care of that for you. But if you add additional accounts later or new integrations or anything like that, you need to make sure that they are all mapped accordingly and correctly.
Okay. All right, so these are the items that we're going to cover when we talk about mapping in Stratafolio. Jennifer is going to show you these in the demo account in a little bit. So please remember, Stratafolio does operate on a cash basis. When you are trying to reconcile between QuickBooks and Stratafolio, you must use the cash basis on reporting to get them to match. Otherwise, they will not. Well, they might. You might get lucky. So new ledger accounts will be mapped by the account type that is attached in your QuickBooks. Sometimes this may not be correct on your dashboard, so manually mapping these accounts is good for accuracy. Using the confirm green highlight can help you see what has been manually checked or not. Unspecified mapping. So some QuickBooks have information that's not exactly asset specific. It might be for other pieces of the business. If needed, use unspecified. It will ignore that account off of your dashboard. Loan and interest, utilizing the loan account mapping will move the principal payments from a loan amount in a loan account in your QuickBooks into the debt service section of your dashboard. Hierarchical mapping, that can be used for sub-accounts or for loans that can specify an account to an entity, asset, or unit, but also to a loan in Stratafolio. Sub-accounts can be used if you choose not to use classes. They can also be mapped to specific entity, assets, or units in Stratafolio, but they do create longer reporting on P&Ls in QuickBooks. So classes are preferred for streamlined reporting and functionality in Stratafolio and in QuickBooks. Remember, we do have knowledge base articles written about all of these items and a lot more that can be found with a simple keyword search in knowledge base.
So let's get into the mapping and go over some of the mapping for you inside of Stratafolio. So to get into your mapping, you want to go into your integration and then into the account that you want to verify. And so this is our QuickBooks Online account. So I'm going to show you when we do the onboarding process, again, we go through and verify that all of these accounts are mapped correctly. Sometimes we map them based off of what it says in coming through from QuickBooks, and sometimes it's correct, sometimes it's not. So we do a visual on all of these accounts every time. So you will see that this says 259, and I know it's probably hard to see, but it says 259, I promise. And this says 256, meaning that there are some unconfirmed accounts. So I'm going to click on here, and this will show me any of the accounts that have been added since the last time I confirmed these, or if they've been changed drastically. If you just change like an S on it, or change it slightly, it doesn't change. But if you change it drastically, like changing account types or anything like that, you will need to come in and verify it. So these you can select one at a time, or you can select in groups, however you would like to do. And so these expense accounts, these are reimbursable expense accounts for utilities. These are already mapped to operating expenses for CAM for utilities, but if I wanted to change that, I could select map accounts and then this pull down. This is what Emily was talking about, unspecified. So sometimes people don't like to see depreciation or amortization on the dashboard, in which case we unspecify it. Nothing happens to those accounts in your QuickBooks or anything else. We just make it so that it doesn't flow to your dashboard. That's all it is. So for this specific example, I want to scroll down to operating expenses and utilities. And then because I selected an operating expense, then I am able to select any subcategories that I have created already for my CAM reconciliations. So for this one specifically, I want to use utilities. And then I want to save and confirm. Saving it just saves it, but when I do the save and confirm, that's going to add my little green box right here to tell me that I've already confirmed it, so that I know that I don't have to go back in it. Again, I'm going to click there, and now you can see that those are all gone because I've confirmed those. The other things to note in here is this is also where the classes are. So if you are using classes, this is also where you will go in and map those classes, which we do have knowledge base articles on how to map the loans and CAM and classes. So we have knowledge base articles for all of this. But this one is going to be that this class is mapped to the asset, to the building, and then we also have some map to the unit, depending on what the situation may be. Please keep in mind that if you do not have a class on a reimbursable account, it gets set, that expense will get divided among your whole entire entity. So you do need to have classes on all transactions, which I believe leads us into, I'm coming. It's a slow one. Using classes for QuickBooks. So as we have probably told most of you many times, we prefer classes at STRATAFOLIO because of a lot of reasons. Mainly because when you are purchasing a new asset, if you have the same ownership in that QuickBooks account, please remember that, and remember to check with your accountant, make sure that your accountant is good with this, but you can add an extra class to your QuickBooks account for that asset. When you do that, everything else is already mapped inside of STRATAFOLIO for all of your expense accounts and reimbursable accounts. So all you have to do is map that class and you're done with that. So this is our best practices, how we suggest that you separate this out, using one class for a building and then subclasses of that building for any of the units. If you are going to have expenses that you need to post to only that one unit, when you do that, 100% of that expense will go to that specific unit or tenant. But we also suggest that you have a class for admin or overhead, whatever you would like to call it. based so that that way you can make sure that your QuickBooks is set up to alert you anytime you're posting an expense that doesn't have a class associated with it, then you would know. And if you have admin and overhead on there, every single transaction that you post should have a class on it. Please remember that reimbursable accounts should only be used for classes for buildings and units, never for an overhead, because overhead and reimbursable don't go together.
Okay, so let's look a little bit more into the examples of those expenses and how we would allocate them. Example 1, real estate taxes. They are typically done by parcel. Sometimes that parcel includes multiple buildings. You could use an entity or an asset level class, depending on how you're set up for a parcel, in order to get all those expenses placed in a reimbursable account to prorata over all the tenants under that entity or asset involved in all the units on the parcel. Example number 2, if you use a unit level class in QuickBooks, when mapped to the unit in STRATAFOLIO, it will apply 100% of the reimbursable accounts expense to that tenant's CAM reconciliation. Grease trap cleanings, I love to use that one. You've probably heard me say it, but typically they need to be applied only to the restaurant. So they get 100% of that expense when you use that class. Landscaping or a separately metered electric would be utilized for a building level class, or example 3. That reimbursable expense account applied to that class will prorata only to the tenants in that building itself.
So now we're going to get into how to clone your CAM for the new year. So honestly, it sounds like a daunting task, but it really is simple. The first thing is to make sure that you have the correct amount set up for this year so that you can clone it for the next year, the right subcategories. So these are the pretty simple directions, but I'm just going to get you right into it. So let's get into it. So in the operating expenses, you have an operating expense tag underneath the operations. This will get you into that view. Typically, I would tell you to suggest to enter in like the last day of the year, but because this is December, it's fine to use the current date. What we are going to do is we are going to pull down here. These filters work just like all of the rest of STRATAFOLIO. You can filter in so that way if you only want to look at certain entities or certain assets, that kind of thing. But I'm going to show you one that we want to clone, and that is HVAC. So I have a tenant called HVAC Central, and this is actually the lease for HVAC Central in this other tab. And so you will see that in here, I have 2023, and they have 3 different subcategories: real estate tax, insurance, and CAM. So this is what I want to clone over to 2024. So in my operating expense tab, I'm going to select this lease, and then I'm going to clone selected OpEx. If I have any errors, this will show up here just like it does for invoicing if there's an error, and it'll have a little button that you press, and then an Excel will show up and it'll tell you which one has an error and what the error is. If you don't understand what the error is and you can't figure it out, please feel free to reach out to one of us and we'll be more than happy to help you. But to make that, all you do is press the clone button. You can do as many of these as you want at a time. You can do one, you can do all of them. It doesn't matter. And then I'm going to go one step further, and I'm going to go ahead and I'm going to confirm that I've done this one. This is just something that we do, especially if we are doing your cloning for you as part of our team, to verify that we have done it and that I don't have to go back into it. So I'm now back to my lease. I'm going to refresh that page. And when I refresh that page, there is my cloned CAM for 2024. So that cloned over the exact amount, everything cloned over exactly the same as it was for 2023. The only difference is I purposely picked this one because this one does have some caps. So I wanted to show you what a clone cap looks like. in the fact that this one has a cap for real estate taxes, a 3% cap from the previous period. So this is the amount from the previous period. And then when you look into 2024, you will see that we added automatically for you that 3% cap. So we do those calculations for you when we clone it. One of the other advantages of cloning it rather than making it individually by hand. So we clone that amount. However, if the amount needs to be changed, so for instance, we know that the real estate taxes have gone up this year or anything like that, we can change that. This is my CAM reconciliation currently for this tenant, and the taxes have not all been posted yet, and that's the reason why this is the 14606, is because they have not been posted yet. So that's the reason why. But if I know that the insurance is going to be higher or anything like that, I can simply come in here and I can change the amount for next year for insurance. So I can do changes either by square foot, a monthly amount, or an annual amount. So if I want to change this annually, that I know that my new insurance bill is going to be 57,000, is there going to be their portion? I can simply do that and press save changes. And then you will see that now that is with the increase in the insurance. One thing we do suggest is after you are done with all of your CAM reconciliations and updating everything, is to run this CAM expense report when you are done. This CAM expense report can be done whenever you want to, but basically what this does is it gives you a period of time that you can select from. So you can select from 23 to 24 or back from 22 to 23, whatever you would like. And again, you can filter however you would like to. I've already done one, so let me show you what that looks like. And this is what it looks like. So this is for that property. So Acme, Fleming, and HVAC. And you can see that this is the amounts for 23, or yeah, 23 and 24. And so you can see that this one has been updated slightly. It's kind of hard to see in the small little print. I apologize, but so you can see that this amount has been updated, but this amount for the second tenant has not been updated yet. So we need to go back in there and verify and update this. And now also, now that we've cloned the CAM for HVAC, that'll show up here as well. So again, this is a report that can be done whenever you would like over whatever kind of periods you would like to do. So let's get back into the presentation. There it goes.
All right, these are some additional situations that can come across with CAM and operating expenses and the leases. Caps are, when we have a cap in a lease, you can find that in the invoice section. You just saw it with Jennifer there. You can edit each subcategory to cap it. We do allow for year over year or specific amounts. When you clone the CAM from one year to the next, we'll calculate that amount for you, 5% or 3% or whatever was in the lease. We did just see that. There also can be base years from time to time written in leases. A base year is kind of the opposite of a cap. It's when the CAM is included in base rent on the first year of the lease. Then the tenant pays CAM for anything above that amount in the following years. Stratafolio has not yet built a way to show this automatically, but if this applies to you, Jennifer and I may have a way to help you do it easily. So please reach out. We do have the ability to break out controllable and non-controllable subcategories as well. This can help differentiate with your reconciliations on those expenses that are beyond your control or not. Typically, a non-controllable would be something like snow removal, since it varies from year to year. Controllable can be something that the landlord has control over, like parking lot maintenance. All of these should be clearly stated in the lease. Pro rata share can sometimes be rounded, or like a mezzanine was added and a tenant is grandfathered in. Whatever the scenario on the edit function in your lease, there is an override to change the pro rata shares on these reconciliations. Remember that override is for building square footage. So sometimes you have to do some math to get your percentage right, to match what the lease says. Also remember the date range on the operational expenses tab in the lease can only go as late or as long as what your lease term is for. When you are doing and putting in amendments, you may need to hit that operating expenses tab and extend those to make sure that your CAM charges continue as well as your lease rates.
And actually, I wanted to pull this up as well for you, Jerry.
Yeah, actually, before we get to that, I do want to give
Oh.
everyone an opportunity to go through some Q&A. So I know we have a couple of questions that we've received, but if you have some other questions now for us to answer, please go ahead and put them in the chat or the Q&A section, and we will address those. One of the first questions that we had is, why is insurance not a reimbursable account if a triple net tenant is paying for the insurance? Do you want to clarify what you were speaking about earlier there, Jennifer?
Yep. So insurance is a reimbursable, and so is real estate taxes. But it's just not, we don't mark it as reimbursable in our chart of accounts just because it is assumed that it's reimbursable. We use different insurance. So a lot of people will have different insurance accounts set up. So like a workers' comp insurance or that kind of thing that is more of an overhead and it's not a property reimbursable. So that is the differentiation for the insurance, is the type of insurance. But when we map as a rule of thumb as onboarding, all accounts that are property tax and insurance automatically, if you have triple net leases, automatically get mapped to that. It's the CAM specific expenses because CAM can incorporate a lot of different things, and depending on what your lease says, can or can't be covered. But that's why the insurance is one of the ends for the nets. So real estate tax, insurance, and CAM. Those are the three ends. Yep.
All right. Another question we had is, what we're showing on what you showed on the example had just a few items of accounts that needed to be pulled in for reconciliation. How many, and I know we provided kind of a shortened version of this. How many accounts would you recommend showing up in that export?
In the CAM reconciliation report, is that what you're referring to? Okay.
Sure.
Yep. So let me go ahead and are you seeing my CAM reconciliation?
Mm-hmm.
Yes. Report. Oh, look at that. It will transfer it over. We automatically, as part of onboarding, we will make a CAM insurance and taxes as part of if it's a triple net leases. These are the standard for everybody, just because these are what a triple net makes up. The CAM can get broken down into as many things as you need or want. Just keep in mind that the more options that you have, the more questions that can come up from the tenant and everything else. And what we do when we are onboarding, the reason why we ask for your CAM reconciliations from previously is we try to match it up to your previous amounts and previous CAM reconciliations. For that, meaning that we want to make sure that we are giving your tenants what they're expecting. So if they are expecting to have snow removal and repairs and insurance, that kind of thing, we want to keep those separated out. Typically what we see is there's the catch-all for CAM, and then repairs and maintenance, utilities, and insurance and real estate taxes. Those are pretty much the most common. However, we have seen a full breakdown all the way down to light bulbs one time. I do not suggest that personally. Our soft limit is about 25. Once you get over 25, it is incredibly challenging to run the reports because there's a lot of information coming through. So we highly suggest not doing that many. However, again, it depends on how much detail do you want to show your tenants at the end of the year and how far down, how specific do you need to go. Keep in mind that we are pulling all of this information from your QuickBooks. All of this information is inside of your QuickBooks. So if they do question, say, what exactly is in that repairs and maintenance, you will know which accounts are in that because you can share that information. That is the other reason why we wanted to show you the mapping as well, so that you can see what exactly is in that account. If you come into those accounts and you sort the tables by categories, the category and the subcategories, you can see exactly what is in each of those. So you can see that my repairs and maintenance account has my HVAC, my plumbing, and my repairs and maintenance. So anything posted to any of these 3 accounts are all going to go into my CAM reconciliation report for repairs and maintenance. That's the other reason why we wanted to show you how to find that mapping, because a lot of times that's when you run your report and you're looking at our report and you say there's something different. It's typically this, that there's an account that is not clearly marked reimbursable that we don't know, or something is not mapped into the right account that you are expecting it to be mapped into.
Thank you, Jennifer.
Did that answer it? Okay.
Yeah, we have another question. Someone is converting their or cloning their 2023 to 2024 numbers, and they've done the cloning, but the numbers are exactly the same. The amounts for each one of the reimbursable areas. What other steps do they need to take to increase for the following year?
Yep. So the one that I did for the HVAC is what you need to do. So again, this is my 2023 amounts is right here. And then if you have anything that needs to be updated for the 2024, after you have cloned it over the 2024, you come in and you can pencil with that and change the amount. Again, if it's by square foot or if it's whatever the situation may be. This is pretty much almost should happen on a regular basis for your real estate taxes and your insurance, because those ones typically, you know, that those are going to change from year to year. The other reason why the CAM reconciliation reports are so helpful is because, for instance, this is my 23. Right now, I am well below, and I would owe this tenant money at the end of the year. However, I also know that I have not posted all of my real estate taxes, or so I'm good with it because not everything has been posted. So I know that. However, I would want to make sure that, you know, I'm as close to zero as possible for this. If the tenant owes you money at the end of the year, so if this was in reverse and the tenant owed you $46.24, then what you would do is you would come back into that lease and you can make a separate invoice just for that one thing. So in here, you can add a separate invoice for reimbursable, CAM reimbursable, whatever you would like to call it, as long as you, again, just remember, as long as you have an income item created for it. Make your income item for it and then post that amount and make a separate invoice. You can delete all of the other lines. You just need the one line, and put in there, you know, reimbursable, or, you know, true up, however you'd like to phrase it.
Great, thank you.
Mhm.
We have another question. We have a client who is doing CAM reconciliation, and they want to make sure that they are adding in caps. How would you add in caps for any of your expenses?
Yep. So depending on what the expenses are, this one again has a cap. Let me show you how this gets added. So in this real estate taxes, we have, this one is a cap by a percent, so 3% from the previous year. So the previous year, like I said, we in Stratafolio, if you've made it once, it goes ahead and it clones already. So that is the other reason why when you are onboarding, we ask you for, if you have caps, how much was the cap in the previous year? So in 2022 or 2023, how much was that amount? Because that is what we are going to use to make those caps for the next year. So this would be how much the previous year's cap was. So this is 24. So this is what the cap was in 2023. So that is that amount. And then that is the reason why on the CAM reconciliation for this one, there you go, not to exceed this amount. So that is their portion that it's not to exceed. Again, I haven't posted the new transaction. So that's the reason why it's a little low. Actually, here's 2022. So in here, this was not to exceed that amount, and this was actually the exact amount. So therefore, nothing is reimbursed from, or nothing is due to the tenant from that amount. But it will do the calculation, and if you've invoiced too much for it, it will tell you that you owe the tenant that much money back because it's over the cap amount. Make sense?
All right. I don't.
Oh.
Emily, did you have anything else to add to that?
No, I was just going to say that not to exceed period, it will actually cut off. So in this suggestion, you do have the subtotal of 30,000 and it caps it to the tenant total portion. So it will say, nope, not beyond that, and adjust it for you.
You are correct. Thank you. Yes, that is the amount, that the subtotal. So that is, yeah. So their portion truly was 30,000, but they will only pay the 29,000. Yep. Thank you. I knew it was there. And if actually one more thing, if you do have the tenant or unit specific expenses, those will show up in the CAM reconciliation as a tenant 100% responsible. So it adds an extra column. I believe it's right here, but there is an extra column that is tenant specific of 100% amount in there as well. Yes.
Okay, Emily and Jennifer, thank you very much. Was there anything else that as we were going through things you wanted to quick throw in or mention? Okay.
Nope. Nope. Well, I just wanted to mention, just remember that we are here for you to help. And, as most of you, I recognize all of the names on the list. So I know that I've talked to many of you multiple times. So if you have questions or if there's something specific, please reach out. We want to make sure that you are using our software and to the full ability. So we are always here to help.
Yeah. Thank you so much, Jennifer. Thank you, Emily. All right, so that's going to wrap up our Q&A session. I did have a few last reminders for you all. If you're not aware, as of this year, we're a QuickBooks solution provider, and we do offer discounts on QuickBooks online accounts. So if you're interested, you can reach out to me, Jerry at stratafolio.com or support@stratafolio.com. And if you need help, even though your onboarding is over, please reach out. We can help, just as Jennifer said. We can either set up some sort of package for you or just help you on an hourly basis, but reach out. We want you to be successful. Additionally, I want to remind everyone that you can access our partner page on the left-hand navigation of STRATAFOLIO. And once you're there, you go to the earn or save, and you can earn for referrals or you can save through our partners. And I would check those out because there are some great partners for you there from a lender perspective. Maybe you're looking to see what you can find from a competitive rate. We have some resources there, or tax incentives you might want to take advantage of, or insurance, or other accounting partners that we work with. You can access our knowledge base as well that we talked about a number of times also on that left-hand navigation. And we've written any of the knowledge base articles we've written them so that you know and understand how to operate within STRATAFOLIO. Just type in the keyword CAM or operating expense, and you will see all of the articles that we've talked about on that topic. Lastly, we want to hear how we did. So at the end of this session, we'll have a survey where you can fill out, and there's an opportunity for you to share topics that you would like to see in future webinars or topics that you would like us to write about. So please reach out, tell us what you're thinking. And with that, thank you all for attending our webinar on CAM and CAM cloning. We hope that you found it informative, and I think you'll find that this is not that daunting of a task as you thought it might have been. So we look forward to talking to you all next year, and have a great rest of December and successful 2024. Thank you.